Hello guys, welcome back to another lovely trading video. In this one we're actually going to be doing something new. It's kind of a small account challenge, and we're just going to start making an account starting from a small amount of money and just try and grow it over time and just see kind of how big we can make it, just to kind of prove that you don't always need a massive amount of capital to make good returns. So for example, we are using a platform called Freetrade. This is a UK one because I'm just using this with my UK money. But same thing you can do in America. Obviously these are going to be more swing trades / investments, so the pattern day trader won't matter. It's just I had access to this account, so it just kind of made it more convenient because I'll be depositing making the deposits in UK pounds anyway, or Great British pounds anyway. So to start off, what we're going to be doing is for the first week, well, we started it on the 22nd, but we're going to be starting properly this week. We took a few trades, we'll go through them, but yeah, we're going to be starting properly this week. We're starting with, as it looks like, £180 in the account. We're going to deposit £100 for the next month, so the next 4 weeks, and then after that we're most likely only going to deposit £10 a week, so that's about $12 to $15 every week, and just start seeing how it will grow and seeing what kind of trades and returns we can make as a percentage form on this account. And then every once in a while we may do larger deposits, just start building the account quicker and quicker, and it may match kind of real life, because sometimes you may only put away, saying you can put $10 a week or something, but then you might get like your tax return or something and you have a bit of spare money, so you can throw in a bit of extra money. So we will occasionally throw in a bit more money on the week or the month or something like that, but we will go through that in the video so you know exactly how much it's deposited. And when every week we'll probably do this video once a week or every other week, and when we do it we'll go through how much has been deposited so we can see the actual returns, and yeah, so we'll go through the deposits every week and how much we're doing. The only thing you do need to be the only thing you do need to realize with free trade is you'll be able to see with this, it says the account's loss, I don't know if you can see, £2.65, that's just from trades we took this week. But on free trade it doesn't work like Robinhood where your accounts kind of change. It works more like TD Ameritrade where when you deposit money it doesn't kind of recalibrate it, it just acts as a jump, as if you just had a massive trade. So you'll see that every week when we deposit on that Monday, it will probably have a big, or maybe not always a big spike, but a spike from where we deposited the money. But to get straight into it, we will have screenshots on screen so you can see each of the trades we've been going through. But we're currently in 5 trades, and that's ROKU, Smile Direct, Visa, PayPal, and DraftKings. And right now we're in, let me just quickly check, we're in with 30 or 40% in stocks. That's because we've just deposited £110 today, and so the other £70 was in the stocks from last week. And just by the way, all these trades that will be taken on this account will be US based stocks. Won't be trading any UK based stocks on here, just because I trade the US markets myself. So what we will do every week is probably just go through the trades we're looking to take in the upcoming week, and got in the previous week, and just say kind of how much allocated in it. We're not really going to have too much tight stops on these kind of accounts because it's more of a small account we're trying to grow. We're going to keep it more as a long-term swing / investment account. Over time, as the account does start to grow, we will tighten kind of the risk management on it, because you'll see, for example, Smile Direct, that one we got in purposely on small size just because we knew it is a very, very volatile stock. We have about a max risk of about 20% on here, looking to make around 50, and we'll go through the chart to show you why we have this analysis. But we'll start off on ROKU because that's at the top. I don't know if it does it by size or like how much you have in the stock. Let me just quickly check if that is how it does it. Current value 24, 16. I think it does it then in, yep, so it looks like they put them in value. So then every week we'll go through them in the largest percentage of our account. So ROKU is a trade we're in first. In this one we're in with £25. And the reason we got in long with this stock is you can see with Roku, it has now come into its second deviation on both the daily and the 4 hour. So to us, this was a low risk long. See, it's actually still got to push a bit lower down on the 4 hour, but on the daily, it did actually hit around that 221 area. Since then, it has bounced. You're probably wondering why then the position is down a bit. Because this was the first trade we actually took on the account, I was just making sure, understanding how the broker works, because I've never used it before now. And it does seem the spreads are kind of wide. Sometimes they're about $1 spread. It's not going to matter too much because we are looking for probably about 10 points plus on most trades we're making. So you'll still be able to see the growth. But that one was more of just a tester trade because it was the first one we took. But anyway, getting into it is, yeah. We're looking, well, we look to get long because it's come into this first deviation, so we're in long with about $25 pounds. But if it does continue down, it is something we will kind of just average into. So the ones we aren't as risk managed on are the ones that are very oversold and usually not on heavy news, and something we believe in that will reverse within the next few weeks and or months. And Roku is a prime example. It got down this massive sell-off here. Only happened just due to an analysis coming out and downgrading its price target on Roku. Only one company, and wasn't even one of the leaders. You know, it wasn't a JP Morgan, it wasn't a Citibank or Citigroup. It wasn't any of those kind of even bigger names, so it was very surprising to see it drop that much on there. So to me, it seemed more of an overreaction and made sense to be getting long when it came into our low risk long area. Next one then is Smile Direct, ticker SDC. Now this one we didn't really trade off deviations, just because when it tells us to buy on a deviation side, it's going to be around £1.50, $1.50, and I don't really see it dropping down to that low, at least in the near future. So instead, with SDC, what we did is we traded a normal or a recurring pattern within this stock. What you can see within this stock when looking at it is that it does these gaps, it then sells off for the next few days, and then usually comes back to retrace and gap that fill that gap, sorry. And we've seen that now multiple times happening. So how we are trading this trade is we're looking for the gap fill at around $5.20. Kind of, we saw the gap, we ended up getting long, I think around like $4, or about, I think it was $3.77 was our average. So kind of as it sold off, something we were more just looking to get in a bit early. Something we may add in size. If it pushes all the way down to $3 as a psychological level, we will probably throw in some more size there. But this one we're looking at more for the target of 520. So now you're probably thinking, well, you're down about 11% on this position. Is that not extreme? Firstly, no, we're not in with massive size. We're only in with £16 plus. If we're going down to where we expect it to kind of bounce, even if we go to our average of around, let's say 373, we're looking for around a 40% return off there. But it's something we would probably even average down or average up on, so our average will be lower. But that's a reason why we're willing to risk up to kind of 20% on this trade. If it breaks below $3, retests $3 and fails again, then it's something we'll just close out, take the loss on, and go on to the next position. But for right now, it's something I'm liking the look of, and Smile Direct is one of those stocks that I do quite like the look of. And then next one then is Visa, one we did actually make an analysis video on, I think this week, on saying it's now come into a really low risk buy area. So yeah, we will see it did start selling off. You'll see this gap here. I believe this was caused on the news from Amazon saying they will drop Visa, I think only in the UK due to their credit card fees being excessive. So in the UK, I think starting in the new year, you can no longer use a Visa credit card to use Amazon. You can only use a debit if you're using a Visa card. Don't believe it affects the US market. But that's the initial reason it sold off. I imagine they will kind of resolve it. But either way, it sold off. It is still coming to a very low risk long area. So we've got in long as it's coming down to this $93 to $190 level. And really our overall target will kind of be around that 220, and probably even going into statistical mean of around 230. But we will probably lock in a bit of profit around 205. and probably a bit more around 215, and then locking the majority coming into 220, 230. Whenever on these trades, really looking to trade past a statistical mean, even though I said it's more of a swing trading / investment account. And the reason for that is once a stock comes into statistical mean, it's very unclear where it's going to go. You can't really predict it. Unlike Visa where it is now, we can predict more likely than not it's going to go up from here. However, if it's at the statistical mean, you could quite easily pull back, you could quite easily carry on upwards. So when it comes into that level, it's usually when we close out the position completely. Now, next up, PayPal have about an even size between Visa and PayPal because they're the same kind of trade. The only difference between them is just they're different tickers, and so we can basically take same trade but diversify the risk out, because you may have news come out, say on PayPal, that or Visa. Actually, Visa is a great example. You may get news on one of them saying Amazon's no longer going to accept them as a payment provider. Then if we're diversified between, we can still kind of hedge that risk, and if one, let's say PayPal then goes back to the target we would look to, in this case around 230, 240, and then Visa sold off a bit more, we could close it out and probably even get a bit of a win, if not get out break even. So when stocks are very similar and they're at the same buy levels, it can make sense to kind of just cut the size out of it. But on PayPal, you can see it's broken through the second deviation on the 4 hour, looking like it will push down to 175, which is where or 175 to 180, which is where we would add in size on PayPal, because that would be the third deviation on the 4 hour. Going on to the daily, it's already touched the third deviation, so it wouldn't be unlikely to start seeing PayPal continue up or start going upwards from here. And our target would be, our kind of key target where we get our majority of size would be 220, and the reason for that is that will be just before we kind of fill this gap over here. And when PayPal comes into this area, we would expect, even if it's going to continue high, we would expect a large pullback here. And the reason for that is obviously we expect selling pressure to come in when the gap is filled, but it also shows like it's a heavy support / resistance area in this zone over here. As you can kind of see, this is where it tested continuously. So it's something we would look to get out just before it comes into this zone, just to kind of lock in those profits. Then the last one that we're already in is DraftKings. I think it's TKG, yep. The reason we got long on this, as you can see, coming into the second deviation on the daily, and also kind of we got a long beginning at the first deviation on the 4 hour. Something I quite like the look of, and it has been selling off quite hard. When you see this, you tend to see it as an overreaction, and that we can look to trade the reversal, especially when you get these consolidation periods here. Because when you see this, yeah, you expect it to sell off, and then you would expect it to at least come back to kind of that $40 level and test that, if not even push it all the way back up to $47. Even if it's going to continue low, you sometimes see it test back to these levels before continuing its trend. But yeah, something we're looking to get long at. If it pushes down to that $33 level, add in a tiny bit more size. But DraftKings isn't one of those where I'm going to go super heavy in, just because there will be better trading opportunities out there. Now to go over kind of trades we're looking at for this week. BA will be one of these. Quite liking the look where it's coming into now. It's coming into these low risk buy areas. It's coming to the second deviation on the daily. It's just touched the first deviation on the 4 hour, low risk. So we will probably look to buy up a small amount on Monday as market opens. And then if it continues low, we would definitely be averaging in at kind of this 181. And then 178, and that's where we would get in with relatively large size, because from here we would expect a relatively large bounce if it pushes down to that level. Then one other thing we're going to be looking at is a oils ETF, and the reason for this is if we go over to crude oil, we can see it's been selling off quite heavy. Reason for this is, firstly, it had been going up so just quite hard recently, so you would expect it to pull back. And then also on the news on the South African variant of COVID, it's just created some fear in the markets. And when you see this, oil is usually the first or one of the first ones to go, especially due to COVID, for the reason being, if lockdowns start again, obviously less oil will be used, leading to prices going down. So something we are looking at to get long. At 66.90 we will be getting some small size. But we will not be getting in with massive size because I do actually see it falling down further to 61, 65 slash kind of the $60 mark. The reason for that is here it just makes sense to have a much stronger bounce because you've got D2 deviations very close. But the reason we do get in some size at this 66.90 is because it could bounce now. So it always makes sense to just get maybe a bit of size in. If that's not where it's meant to bounce, it doesn't really matter. We're looking for the key target around $61 to $60. And then that's kind of the key ones we're looking at the moment. Moderna may be one we look to trade soon just because of how volatile it is, especially on this news. When it pulls back to this kind of 295 level, may take a small long position on it just because we would expect it to have a bounce coming into this level, but wouldn't be any serious kind of trade. It would be something we're probably in for a day, 2 or 3. Looking at the chart, so I think they're going to be the main trades we're looking at coming into this week. We do have some earnings, I think, on Dollar General, Snowflake, I think DocuSign. So a few big names will be on the earnings this week. So if we see anything happening with those, they come into low risk buy areas. That is something we would do. Last thing, actually, then I had forget to say about this is, on this broker, at least my free trade one, it is only a long bias platform. I can't do any shorts. So we will only be taking long bias trades, but that's quite good because I did say we are kind of using this as a swing trading slash investment account. And on an investment account, you probably wouldn't be shorting, especially if it's something like a retirement account or like that, because in most retirement accounts, you can't short anyway. So that's the overall kind of breakdown on this new video that we're going to be having once a week or every other week. I'm just doing a small account challenge and we see kind of how good we can get this to grow. Be good to see kind of where it is in a year's time. And again, every week we will compare it to how much we have deposited, so you can actually see how much we have gained in total as both a dollar amount and then also a percentage gain, because the percentage one is going to be more of a important factor, because whether you're trading with $100 or $100,000, you can usually do the same kind of trades, you'll look for the same kind of results. So the dollar amount doesn't really matter as much. So hope you enjoyed the video, hope you see you in the next one, and that's it. Peace.
I wanna go, I wanna fly, I wanna take myself to